20 years ago, I listened to a BBC World podcast program about the BRICS economies: Brazil, Russia, India, China, and of course South Africa. According to Goldman Sachs chief economist Jim O'Neill, they were the booming economies of the future, and young people like me needed to hitch our careers to those economies instead of the has-beens of Europe. About 10 years ago, I was actually able to personally thank Jim O'Neill for coming up with the theory that got me interested in investing, finance, and economics in the first place. Unfortunately for both of us, my guest today claims that the BRICS idea turned out to be utter BS, to put it politely. Callum Newman, what makes you so rudely dismissive of an idea I hold so dear to my heart?
Well, it's funny, as I allude to in the article, I just made the point that, or trying to make the point about how perceptions don't always match reality. And if we go back to when Jim O'Neill released his report, but even later when I referred to in the article, in 2012, they were still perceived to be the big growth markets. And I remember the conference that we held, and the guy got up and said, India, and they have lots of people, and Russia has got lots of people and lots of resources, same for Brazil. And of course, we didn't know it then, but that was a peak in the commodities market as well. So that whole idea, whilst it seemed compelling, actually turned out to be a total dud. So the perception was that the US could go into another global financial crisis, if you like, or lead another global financial crisis. I remember our colleague Vern used to say, I think it was GFC Mark II kind of thing was coming, and that was perceived to be the truth. And so there were even a few books came out from some of our Agora colleagues to go, look, well, if the US is cactus, where can you go? Where can you find opportunities? And the BRICS was one idea. Now, at the time, I was only just starting, so, it seemed reasonable enough to me. So I'm not saying that I was smart enough to foresee what happened in the end, but what did happen was that the only place you needed to be was the US. That's where all the action's been. Most of the other places have been a disaster. And that whole idea, even though it seemed compelling, turned out to be a dud. And if you had invested on the idea that the BRICS were the next big thing, you would have gone absolutely nowhere.
Yeah, it's such a vague idea as well. We've talked before about how there's not necessarily a deep connection between GDP growth and how asset markets, particularly stock markets, perform. But even then, just saying BRICS or even China's stock market, or I mentioned South Africa's, but it's such a vague, big, broad idea. It wasn't that valuable to begin with, and what mattered more was maybe the particular sector within each market that you were exposed to, regardless of what country you ended up investing in. And it's also always worth remembering that America's capital markets are inherently so deep and international that that they're exposed to the global economy anyway. You also argue that Europe's has-beens are the place to be with your money now, which is an extremely rare thing to say. So take us through what your logic and your reasoning was in your article today.
Well, not so much that the European has-beens, as you call them, are the place to be as such. All I did was, there's a book called The Investment Biker, which I really like, written by a guy called Jim Rogers, who I've done a few interviews with over the years. But the premise of that book is he goes around the world on his motorbike. He's retired, he's very wealthy, and he just looks at a ground level at different countries. And in Africa, he goes through a few and he's like, oh no, that one's a disaster and this is falling apart. And he gets to Botswana and goes, geez, I didn't know this, but this place, it's clean, it's got a hard currency, there's something going on here. And in the end, in the book, this is like almost 30 years ago, he invests some money in Botswana. And later on, in another book, he says, well, he held those stocks for 18 years. So because I've spent a bit of time in Europe, I just thought I'd put, for today's piece, just take on that persona. Okay, if I'm the investment biker, and what have I seen over here? And again, going back to 2012, the opposite of the BRICS was the pigs, which was Portugal, Italy, Spain, and Greece. Well, I've been in some of those countries lately, and as is the way of markets, had you invested in them, you probably would have done it right, because Athens, Madrid, property markets, and Ireland was another one, which is just booming at the moment. So the complete opposite of what everybody thought back then. But anyway, I put on my investment biker helmet, I say, not hat, and go, well, comparing the two. So I've been going to Spain for 20 years. I was there in 2012. I saw it was down in the dumps, the unemployment, the riots, all that type of thing. Completely different to today. It looks like there's a lot of wealth creation going on. The place that I go, the new houses are up, there's flash cars around, people are spending money. It looks pretty good to me. And as I said, Madrid's booming. Spain's got some good things going for it. It's got the trade links with South America. It's within the European Union. It's got the euro. So there's a lot to like there. And I remember actually, it was a while ago now, but there was an Aussie investor whose name I can't remember. He's a property guy, but I remember he said about 8 years ago, the fundamentals of Spain are better than the United States. And the United States was looking very bullish back then, property wise. And that I still remember that, and he was putting a lot of money. And as you say, not very few people would have said that type of thing, certainly back then. So I imagine he's done very well. I can't remember his name. His son, unfortunately, was killed in a terrible bike accident, but it'll come to me if we want to follow up on it. Having said that, I have not been to Greece before, and so I came with great expectations that everyone knows about Greece and the European history and that type of thing. But just one thing I've noticed, and it's only been a relatively short trip, Athens and the Crete where I am, but it just looks a lot more run down than Spain. And just here on the island where I am now, there's a lot of empty blocks and just dozens of half-finished buildings, or some buildings that are half-finished on the top but got a shop on the bottom, and a bit shabby and run down and all that type of thing. And it just occurred to me within this sort of investment biker framework, I was like, well, if I was going to invest in Europe, Spain looks a lot better bet than Greece does. And when I thought about it a little bit further, I mean, you described the European economies as has-beens, and in a sense they are. I mean, it's pretty clear now that the wealth is being generated in India and China and Singapore and Taiwan and these type of places. More so with the ongoing tech revolution that we have, Europe is very old-style industrial. So the question is, where is the Asian wealth going to go? I mean, Greece basically runs off tourism, so I don't know if Greece has the same pull for the Asian consumer as it does for Australians and Europeans and Americans. So maybe the Greece of tomorrow is somewhere in Sri Lanka, or it's already there, Malaysia. So that's just an interesting idea. But again, the investment or the finance industry isn't going to tell us until it's too late. So the only way to work that out is to go through Asia and see where all the Chinese tourists like going.
I remember when we first met, perhaps even our first conversation was you'd just come back from Spain or been visiting Spain, and it was pretty bad then in Spain just after the financial crisis, and you were saying that it was an opportunity. So perhaps the fact that Europe goes through these boom and bust cycles makes it the exciting investment destination, because at least you know when something's crashed, right? You know when to buy. So it's a good start. You also
I mean, if you apply that framework, where's crashing now? China. Like, the property market is a disaster. So in theory, if we would apply especially Jim Rogers, who loves to buy in the blast. I remember I actually did a podcast with him a few years ago, and he was excited about Venezuela, which at the time was a total disaster. Maybe it still is, but I mean, he's got a lot of money, but you've got to have a lot of guts to go in there. But in theory, with China in distress, and they're trying to just get rid of all the half-finished stuff, I don't know enough about it, but that in theory would be the place to be looking.
To sum all of this up, you kind of mentioned it earlier, but I pulled a quote from your actual Fat Tail Daily article that says, by the time an investment idea becomes marketable, you're probably too late, or at least not early. I think that investment idea that was not marketable, not spoken about 5-10 years ago was probably Japan, and Japan's boomed since. There was the cable making part of the green tech boom that nobody was focusing on, EV chargers or the high voltage cables or the electricity infrastructure behind green energy. That's been the story of the last 3 or 4 years. That's now quite a big public idea. What is off the radar? What's on your radar because it's off everyone else's radar right now?
Well, that's a very good question, because I mean, I know from experience last year, I wrote dozens of articles, saying to buy up the market, the Aussie market, and this type of thing. And on the whole, people were too scared, and they just didn't connect with that idea. It didn't feel compelling, even though it was compelling when you looked at it rationally. And again, like with what's going on now in the ASX, I mean, the easy place to point to, and it is true, fundamentally gold is strong. The argument is there, and I'm happy to allocate to gold, kind of thing. But the real buying opportunity, or the best in hindsight, was October 22, when gold had been going down, the stocks were in the dumps, And we, with my service, Small Cap Investigator, we got a good little trade away in a stock called Bellevue Gold at the time. Now, to me, the interesting one is lithium. I'm not ready to pull the trigger on it. That whole narrative has been smashed away. Like, I watched when we all saw the stocks go absolute bananas from 2020 to about 2022. The absolute collapse in those is just astonishing. Having said that, commodities are always boom and bust. They just never keep going up. They always have a big drawdown. And so to me, it's like, well, is lithium really going away? Is renewable energy going to get turned off? Well, no. Solar panels are getting rolled out across China. Batteries are still getting produced. China is going after the EV market. I just saw a chart. I think it was The Economist or the Wall Street Journal. I can't remember. But EV sales may be weak around the world, but they're overtaking the gas, as the Yanks say, fired cars in China. So at some point, I don't know when, but the lithium price is going to start going back up again. And you have all those shares on the floor. So to me, nobody's talking about it. Everybody's been scared away. But that's where I'm going to be looking in the next few months.
You mentioned the dichotomy that we face here with the fact that when we write about something, we want to write about the best investment opportunity, but usually that's something people aren't interested in. They want to hear about the big topic of the moment, which is usually a sign that it's a bad investment opportunity. So how do you manage that trade-off in our job?
Well, it's very difficult. I mean, last year, again, I tried to do I did a report on artificial intelligence, and I said, look, this is booming in the US. At some point, this is going to flow back to Australia. But again, this is 2023. Because I specialise in the small caps, the sector was down in the dumps. The ASX was going absolutely nowhere. Interest rates were going up. Sentiment was terrible. And people just weren't interested. Now, in hindsight, the idea I gave those guys is probably in the top 3 recommendations I've ever done, as long as it stays up there. It's up nearly 500%. But again, that's because it was so suppressed. And now it's coming back. So it's a very tricky thing. Usually what needs to happen is there has to be some early momentum before people feel comfortable to get in. If it's still going down and the news is still terrible, people won't go with it. So that's a dilemma, because the best opportunities, as you say, always have to be off the radar of the majority of people, because you need those people to come in to push up the stocks that you're getting. So it is a tricky dynamic. It doesn't always work, but if you're watching this is why we have Fat Tail, so that when you subscribe, that we can give you these ideas. All you have to do is start watching. So it's a matter of or you can, of course, do it yourself. As I allude to in the article, you've got to start looking at things and thinking through what could change, what's priced in and what's not. And that's what we do at Fat Tail. And that's why sometimes, doesn't always work, we get such outrageous returns. I remember Sam Volkering tipping NVIDIA almost 10 years ago now. And you just look at what it's done since and you just go, wow, that's just incredible. Just incredible.
And for those of you wondering, the reason we call it Fat Tail Media is precisely because the Fat Tail describes this concept that there's these ideas at the edge of the bell curve that are not, well understood or well known or favored. And they make their way towards the center of the bell curve when suddenly everyone knows what NVIDIA is. And we specialize in the ideas that remain on the edge of the bell curve, and we try and identify the ones that will eventually one day make their way to the center of the bell curve. So that's where Fat Tail on the bell curve, where the name comes from. I can't help but notice that, of course, gold stocks are not in a mania, despite the fact the gold price is a record high. Our common friend, colleague, Brian Chu reckons there is a gold speculative mania coming once people connect those two dots. So perhaps gold stocks will be the next thing that was under the radar for a very long time and suddenly pops back on. Before you check out Brian's, go ahead.
I was going to say that's a perfect example of what was, if we say October 22 was out on the bell curve, that's one that's coming towards the center because people can see gold's going up. The gold miners are making a lot of money. So I agree with him. There's every chance that they really start ripping up. So when you think of in terms of opportunity, you're not calling them a deep value kind of play, but they're definitely shaping up as a potential momentum type of play.
Yeah, as you mentioned, that it seems to need some initial momentum for people to be willing to take these ideas seriously. You can check out Brian Chu's presentation on a link below this video in the description, but before you do, don't forget to check out Callum Newman's article in Fat Tail Daily today. Subscribe to both our YouTube and Fat Tail Daily newsletter, please. Thanks very much for joining us.